How's it going, everyone? This is Israel, your loan officer down here in Southern California. Today is January 20, 2021. We got a lot of news to cover, so let's jump right into it. First of all, Biden looks to give a big boost to home buyers and builders. Turns out that they're proposing a $15,000 first-time home buyer tax credit. In fact, I had covered this already on a previous video. You can find it here. And again, they're really pushing for this. Hopefully, it's going to come to fruition and we'll be able to see a big boost with this new $15,000 credit for the first-time home buyers. FHA could also reduce its monthly insurance premiums under the new leadership. What does that mean? Monthly insurance premium. I got to do a video on this. I really do. Basically, every time you have an FHA loan, there's this thing called private mortgage insurance. It's an additional insurance that covers the bank just in case you go in default. It's basically their insurance, basically saying, okay, you're going to come in with a really low down payment. The least thing I can do is put an insurance on this loan. And so they charge you a monthly insurance called PMI. And as of today, January 19, 2021, the current rate is 0.85. So you basically take your loan amount and you times it by that, and that's going to give you your monthly private mortgage insurance. Again, I'll do a video talking about more of how to avoid it, how to have it, but then ultimately have it dropped off. But going back to the news, and then there is an elephant in the room: mortgage rates, which are now on the rise. Here's the one thing about news, right? You have a plethora of news all over the place. There is concern, right? Because obviously they're hopeful that the economy is going to pick up and ultimately those rates are going to increase ultimately. And I also wanted to share this other piece of information coming from the world of investors. So let's listen to it. Inauguration effects on the bond market, aka mortgage rates. Traders are far more interested in seeing the details of the next iteration of stimulus and whether or not it can pass the Senate. And in the long term, the Fed's level of accommodation, aka help from the Feds as far as continuing to purchase these treasuries from the government, will continue to be a very big deal. And all we can do is wait for an indication of a shift in their bond buying plans. Okay, to recap, the investors are really looking at two important points. Number one, the stimulus package. They want to know how much is it going to be, and two, when will it be released? And number two, they already know that the Fed has already agreed to continue the purchasing of these treasuries, but up to how long? If the economy starts picking up, we could definitely see the Fed saying, okay, things are doing much better. Now we're going to back up from buying all these treasuries, and ultimately that's really going to hurt the mortgage rates. Now, how long is this going to take? It's all going to depend on the vaccine. The sooner we can get things and people out there in the workforce and things start to pick up, then we'll see the Fed backing up from purchasing these treasuries. Okay, and now as you can see here, the mortgage-backed securities market is doing pretty stable. I could definitely take a -1. It didn't really impact the mortgage industry a lot. And in fact, let's go take a look at these mortgage rates. Conventional loan, 30-year fixed, 420 with a 20% down payment. Not a lot of changes, only with the people with a 700 FICO score range. I'll leave the competition numbers here. You can pause the video and do your comparisons. And the next program is going to be an FHA loan, 30-year fix with a 3.5% down payment. Changes, you can see them here. You can just pause the video. Now, takeaway, take this out. 660 FICO score. We can offer you a 2.5 interest rate fixed for 30 years. If you look at the competition, they start off with 2.6, 2.7, and 2.75 with US Bank, but they require you to have a 740 FICO score. So just food for thought. Also, to include Biden's proposal of $15,000 towards your down payment, well, you can totally see in the near future first-time home buyers taking advantage of this, where this 3.5% down payment wouldn't be an issue because they're going to be getting a credit straight from the government. So again, I'll keep you guys posted on that. And with that, to finalize this video, I'd like to thank you for your time. I'll keep you guys posted. It's been a pretty crazy day. with all the news coming out. If you're thinking about refinancing or purchasing, definitely might want to take advantage of these low rates. And for the homeowners out there, you guys already know we're here to help you out if you want to know what the value of your home is. Just give us a call at 661-388-7667. Thank you so very much. May God bless our nation and may God bless you. Take care. Have a good night. Bye-bye.